Alright, today is Thursday, November 4th, and this is a recap for the stock market activities today. Folks, I got an explosive one for you tonight. Forget about a good one. This is an explosive one, like an asteroid or diarrhea, whatever floats your boat. Let's get right into it. In focus tonight, we're going to talk about what? We're going to talk about sleepy Gensler. While the world is burning and the market is turning into a jungle, SEC Chairman Gensler continues to sleep 23 hours and 59 minutes a day. And then we're going to talk about a dire warning about a market accident, an upcoming market accident. And lastly, we're going to go over the decision or lack thereof from the Bank of England and the influence of toxic, senile, delusional madman Jerome Powell. With that lovely intro, let's talk about sleepy Gensler and the SEC, the dormant organization that is in a coma so far. We are seeing wild action in the stock market, clear market manipulation via options happening right in front of us every single day, and it is getting bigger and bigger and bigger, and it is setting the entire market for an upcoming accident. We've been through this episode, by the way, last year with the options mania, the options market manipulation, and we now know that it was SoftBank behind it. They're blaming retail traders and investors, but it was actually a big shark, SoftBank, behind it last year, who is behind the latest one, because this will result in a massive market accident, and Gary Gensler is nowhere to be found. For example, stocks from time to time experience regular, normal activities in the options market that we call a squeeze, when there is an excitement and people stampede to buy call options. But they buy them believing that the stock will shoot up higher due to bullish catalysts, due to earnings, for example. They buy these call options and they roll out and they roll up, specifically buying monthly expiration. Let me show you how. We have the stock of Ford. Yes, it is experiencing a squeeze, but there is legitimate interest in buying the stock. Here is the options grid for the expiration date for tomorrow, November 5th. Yes, they're buying options out of the money, opening and closing them at the same time, in the same day, flipping these options for a quick profit. There is a gamma squeeze in Ford stock. However, look at the open interest, for example, in the money and out of the money. There is legitimate interest in holding these options and converting them into stock. When we switch to the monthly expiration of November, as you can see, there is a legitimate amount of open interest for the monthly expiration, which is usually what options traders eye. We have elevated volume, but the open interest remains intact. There is legitimate interest in buying the stock via converting these call options. On the other hand, there is a lot of funny business that happens specifically today in the big cap, mega cap technology stocks, including Tesla and I guess NVDA. We can call NVDA a mega cap stock. It's going to be a $1 trillion stock very soon. But let's start with Google, for example, or also known as Alphabet. This is the options grid for the expiration date of tomorrow, November 5th. They were buying an insane amount of the 3,000 call out of the money. Matter of fact, over 22,000 of those exchange hands today with very little open interest, meaning they're buying these options in an attempt to create a gamma squeeze right before expiration, and then they dump them right away without any interest in buying the underlying stock. When we switch to the monthly options expiration for Google, nothing. Crickets. No action at all, no open interest, very little volume, and that tells you this is a short-term squeeze. They're manipulating the market in the short term for immediate gains, and what happens after that?
Come on, man.
Will any of these rallies be sustainable when the push higher was on transitory basis and short-term scope, immediate gains, in, out, hello, goodbye? I think you can answer that question on your own. Here's another one. Amazon. One of the largest stocks in the world with very expensive options, by the way. But somehow, this is the options grid for expiration date tomorrow. They were buying and stampeding on the 3,500 calls out of the money. Matter of fact, over 71,000 of those traded hands today with very little open interest. Matter of fact, when we switch to the monthly expiration for Amazon, nothing. Crickets. They're not interested in buying the underlying stock. They are interested in manufacturing a gamma squeeze on short-term basis, which makes this rally unsustainable. You're going to have to repeat this process all over again next week and the one after that, and this will prep the market for a massive market accident. Here's another one. Tesla. Yes, the action cooled down a lot in the previous 2 weeks, but the action migrated from Tesla to NVDA to Amazon to other stocks. Regardless, we're seeing a lot of action still in Tesla options grid with the expiration date of tomorrow. They're buying the 1250 calls. Matter of fact, over 61,000 of those exchange hands today with very little open interest. When we switch to the monthly expiration, nothing, crickets. They're not interested in buying the stock. It is a manufactured squeeze for immediate gains, also known as market manipulation. And of course, the granddaddy of the action today was NVIDIA. This is the options grid with the expiration date of tomorrow. Look at the 300 calls. Insane, explosive volume of these contracts exchange hands today with very little open interest. Now, I tweeted about this in the morning, and I told you that there is a stampede to buy NVIDIA 300 call options. At the time, they were up only 3,500%. By the end of the day, the same options were up over 11,000%. Now, when we switch to the monthly expiration for NVIDIA, yes, we're seeing some elevated action in volume, but look at the open interest. Crickets, nothing. That leads me to believe that this is a manufactured, an organized effort to push the market and specifically these stocks higher for immediate gains. Don't tell me that this is retail traders behind it. Yes, us retail traders are participating after the fact, but who is initiating these squeezes? It has to be a large player with a lot of power and a lot of resources. Is it SoftBank again? Who knows? The SEC should be able to answer this question for us. The problem is the SEC remains a dormant organization with a disappointing chair, sleepy Gary Gensler, who we thought gonna be the new sheriff in town. But guess what? You think the SEC pick gonna happen by the public or the administration? Of course not. It happens by Wall Streeters, the banks, etc. They pick the guy because they know he will play the role as intended. Stay asleep, stay in a coma until the whole thing explodes via massive market accident. Mr. Gensler, have we not learned anything from the Archegos disaster? The next one will be Archegos multiplied by 10. If not 100, and that kind of accident will not be avoidable this time around. Now, they say that the squeeze in NVIDIA is due to the metaverse, and I told you last week the moment when Zuckerberg came out and said we're going to have the metaverse, which will probably never happen, by the way, that's another scam, but I told you right away they're going to buy NVIDIA, because it will be the provider of chips for the metaverse. But this goes beyond buying the stock. They're not interested in buying the stock. They're manufacturing a squeeze. And this is a very sophisticated effort and organized, most importantly. Somebody big is behind this action. And of course, Gary Gensler, he wakes up once in a while, barks, and then goes to sleep. For example, SEC Chair Gary Gensler warned the financial industry that he won't shy away from going after big firms, pushing the limits in areas including cryptos, trading, cyber fraud, and SPACs. And then after issuing this statement, Mr. Gensler went back to sleep. Matter of fact, I was watching CNBC the other day, and I could not believe what happened because they were talking about Gensler. They cut to an interview with Gensler, and I could not believe what happened. Take a look.
There's an Administrative Procedure Act. They have to follow a procedure in order to enact a new rule that says you can or can't do something. This is a many months process. The important thing is at least we have some facts around what happened with GameStop. At least we can understand it a little bit. And by the way, a lot of people were rather incredulous by saying it's just short selling wasn't a big thing. It was really just a lot of people really enthusiastic about it was the primary reason that people were given for the GameStop run-up.
Right. He did talk about, interesting comment about being technology neutral. Take a quick listen to what Gensler told Bob.
Now, let's move on to the market accident scenario. And here is an interview with Larry Summers. And by the way, when Larry Summers, of all people, is the voice of reason in the country, we're doomed. When Larry Summers is the voice of reason in the country, the nation has about 7 years or so before it collapses completely. Just a fun fact, David Weston, age 69. Can you guess how old Larry Summers is? The answer is 66. One of these guys has about 3 days to live, and it's not the older guy. But I got you, Larry. I'm just like you. I was 85 when I was 12. Anyhow, Let's hear what Larry Summers said, because he's been dropping knowledge about everything. And this time around, he exposes the fraud that the Democrats are leading in the so-called Build Back Better plan. They say we're going to tax the billionaires, we're going to tax the rich. Baloney. And Larry Summers exposes them right away.
So, Larry, you mentioned how it's going to get paid for, the proposals at least, on taxes, and you saw at the very end they backed off of the so-called billionaires tax, which is actually a proposed tax on the appreciation of assets held by people rather than income. They now have sort of a surcharge on multimillionaires, as they call them, as well as a minimum corporate tax of 15%. Is that, as a matter of tax policy, a more sensible way to go?
I thought the billionaires tax was not the right thing to do. I thought the mark-to-market capital gains aspect was impracticable, and I thought the general idea of targeting a few hundred people for a special tax was something that didn't fit with my sense of the right values. Much better to have a broader base tax. Frankly, David, what I think is disturbing is that in the way this bill is likely to pass, it's not completely clear yet, depending on what happens to state and local taxation, there will be a large number of people with incomes of, say, $8 or $9 million who are going to see their taxes go down. And I'm not sure that this was a time when people in the top 0.1% of the income distribution, top 100% of the income distribution should be getting tax cuts. And so I'm disappointed that in a bill that's passing only with Democratic support, we're not doing anything about top-rate taxpayers until they get above $10 million. We're not doing anything about capital gains. We're not doing anything about carried interest. We're not doing anything about so-called stepped-up basis and estate tax issues. I think it's an odd thing for there not to have been more taxation on people who can afford to pay it without going to the rather different step of singling out a few hundred people.
But perhaps the most important part of the interview is when Larry Summers started to talk and answer to Janet Yellen, the delusional, senile, mad person that she is. And Larry said something really important. Let's see if you can spot it or not.
So, Larry, let's talk about the overall economy here. We got numbers out this week showing that growth was slowing as people expected, but it slowed a bit more than we thought in the third quarter in terms of GDP. At the same time, core PCE continues to move up. And we've talked about inflation a fair amount. You were certainly in the news this week because actually on Sunday, CNN played for Janet Yellen, the Treasury Secretary. One of the things you said on Wall Street Week right here, she disagreed with it, and then you disagreed with her on Twitter. Take us into that debate that you're having right now with the Treasury Secretary.
Look, I have enormous respect for Secretary Yellen, and I hope her judgments about inflation prove to be correct. I have the view that we've got substantial risks right now. It seems to me that almost everyone is experiencing a shortage of something. Almost every employer is having trouble finding workers. Those seem to me to be the conditions for inflation to take a ratchet up from the 2% level we've been used to. And I think that's going to happen, and it's going to happen with an indefinite horizon unless somebody does something pretty strong to stop it, or unless we have some kind of financial accident.
So here it is. A market accident waiting to happen. The insane mania that we're seeing as of late, with the market trading in a vertical line, massive inflows, massive manipulation via options, this will lead to a massive market accident. We could be very close to that accident. Perhaps SEC Chairman Gary Gensler wants the accident. He wants chaos and destruction in the market, so he can go to Congress and say, you know what, you want us to do the job, you got to increase our budget, we need more money. And then the money magically flows to certain firms where Gary Gensler brother is working at for quote-unquote research purposes, and then the money floats back to Gary lather rinse, repeat. A lot of consulting fees gonna be in all of these bills, by the way. And here is the delusional Janet Yellen, of course, saying that inflation is still transitory and it will ease. She's confident that inflation will ease next year. This is the same Janet Yellen, the senile leader who cannot even look at the camera straight, yet she's making decisions on your behalf. Now, let's move on to the story of the Bank of England, or what happened in the morning, because part of the reason behind the so-called rally and the drop in the 10-year yield and Treasury yields in general was the action or lack thereof from the Bank of England. The setup was hawkish, by the way. For example, yesterday, before the Powell conference, before he started puking all over the place, the Bank of England said there could be about to hike rates in face of surging inflation. Matter of fact, the Polish central bank vows whatever it takes to curb inflation. They hiked rates higher as the inflation rate in Poland surges. On top of that, we have many countries now issuing guidelines of interest rates hikes to curb inflation. The countries in yellow are hiking rates higher. There's only one country that is actually cutting rates, and that is Turkey. What a disaster that economy is. Turkish inflation climbs to near 20%. Make that 50. In reality, it is 50. Amid rate cuts, they're cutting rates as inflation surges higher. And I'll say in about 3 years, that entire economy, perhaps the entire country, is going to collapse. The action was so hawkish prior to the Powell conference to the magnitude that traders were moving up expectations for the first hike to the summer of 2022. It was December 2022. It moved back to November, to September, and now to June, and soon enough March. And before you know it, we're going to have the scenario of the Fed having to jack interest rates higher abruptly, and that would nuke the entire market and the economy, by the way. And here's what happened. Jerome Powell came out yesterday and said, you know what? Yeah, we're going to taper just a little bit, but inflation, by the way, is still transitory. So forget about interest rates going higher. Lying to his teeth, his nose was actually growing as he was saying that. And here's what happened in the morning. The Bank of England kept interest rates on hold, dashing investors' expectations for a hike that would have made it the first of the world's big central banks to raise borrowing costs after the pandemic. Yet the delusional madman Bailey, the Bank of England, says the warning signs are there on inflation. So are you doing anything about it, Bailey? Of course not, because Powell came out yesterday and said, you know what? The cabal of central banks, the satanic cults of Davos and the World Economic Forum, hold your horses. Hold. No interest rates hikes because the overlords did not give us the green light yet. And here comes the clown Bailey today after the chaos that he caused by flip-flopping. Bank of England Governor Bailey says it isn't his job to guide financial markets on interest rates, hitting back against criticism that he misled investors ahead of Thursday's policy decision. And I say, you know what? Jerome Powell is toxic. The Bank of England was set to announce a lift-off timetable at least, but Bailey got emboldened by Powell to back off. Therefore, this madman Jerome Powell will let inflation go out of control globally. And perhaps all of this is part of a plan. See what I'm saying? Somebody's buying farms. I'm not going to name names, but somebody buying farms all over the country. And we have the central bank intentionally pushing inflation higher, out of control. What's going on here? And you and I know that this cute taper that they did yesterday is not going to cut it. Inflation will continue to surge out of control. Matter of fact, we have an ex-New York Fed President Dudley, and he says taper will not be enough. The Fed has more to do than the market recognizes. The central bank might need to raise interest rates more than twice as high as investors anticipate. The accident is going to happen one way or the other. The delusional market participants who think that the market is going to continue to go higher, what was the catalyst that pushed this market higher out of control beyond any reasonable valuations whatsoever? The answer is that cocaine. The monetary cocaine in the form of quantitative easing and assets purchasing programs. Well, they're cutting back. Hello? Time to wake up. But these zombies are begging to be buried. We're seeing a lot of market manipulation right now with from the big sharks. Tick-tock. The market accident will happen, and it could happen sooner than you expect. While nobody's paying attention, by the way, the Treasury is tapering more than the Fed. They're cutting over $1 trillion in bond supplies. Tick-tock. Anyhow, folks, we're moving on to the market's coverage today, starting with the market's performance, and here we go. The Dow Industrial Average closed in the red, down by 33.35 points, or a decline of 0.09%. The Nasdaq leading the pack with gains of 128.72 points, or 0.81%. The S&P 500 also in the green by 19.49 points, or a gain of 0.40%. What about the sector's performance today? Leading the pack at number 1, capturing the gold medal, technology, aka NVDA. At number 2 for the silver, consumer cyclicals. At number 3 for the bronze, communication services. Meanwhile, the laggards of the day, led by financials, real estate, and healthcare. Of course, denting the gains in healthcare is the collapse, the crash in Moderna, which took other vaccine names down with it, Pfizer and BioNTech. What about the advance to decline ratios? We had a rally today. The market went higher. The bulls in charge. Meanwhile, the NYSE only 37% advancing versus 59% declining. The Nasdaq surging higher on only 40% advancing versus 56% declining. Moving on to futures, what's going on here? Crude oil is taking a break now, down another 2% or so for the WTI, and losses of a little under 1.5% for Brent. Natural gas prices remain on the flat line. What about softs? Again, when oil goes down, lumber rallies higher. We have a rally in lumber of about 3% or so. We also have a rally in cocoa and sugar futures. On the other hand, we have losses led by cotton, OJ, and coffee futures. What about metals? What's going on here? Even though the dollar went down, we have a rally in both gold and silver. Gold and silver are reacting to the action in the bond market. Yields went down big, and we had a rally in bonds, and therefore gold and silver are popping higher. On the other hand, we have a flattish action for platinum, copper, and palladium. Of course, they would react negatively if the rally in the US dollar continues to go on. We're seeing the impact of tapering on the dollar. What about meats? We have a retreat for both live and feeder cattle futures. Meanwhile, lean hogs futures, aka the new big tech, surging higher with gains over 2% today. And by the way, pay attention to meat prices, specifically pork and beef. Not in the New York exchange, but in the London exchange, because prices are surging out of whack in that country. It's not just inflation pushing prices higher. We have the Brexit fiasco, where they cannot butcher the meat in England, or Britain, I should say. So they have to export the meat to the European Union and then import the meat back. And this is adding more fuel to the fire in the inflation in meat prices for both pork and beef. The solution is stop eating pork. I mean, look at them. They're cute. Come on. Come on, man.
Come on, man.
Lastly, what about grains? Grains are retreating due to the retreat in oil prices. Energy prices are down, and therefore grains also pulling back across the board. We have losses led by soybean oil, canola, soybeans, soybean meal, corn, wheat, oats, all down. The only shining light in grains futures today was rough rice futures, gaining about 1.5% today. Moving on to options, the big casino. What's going on here? Explosive action. The volume exploded higher today across the board for certain names, of course. We're talking about NVIDIA, Apple, Tesla, AMD, Ford, and Amazon. Yet leading the pack, NVIDIA, with over 1.5 million contracts exchanging hands today. About 72% of those were calls. Take a look at this. Apple at number 2 with about 1.5 million contracts, 82% of those were calls. Insane. At number 3, Tesla, with about 1.3 million contracts exchanging hands today. About 52% of those were calls. Now, you gotta watch the implied volatility, by the way. Look at NVIDIA. The IV percentage is 99%. What does that mean? In all likelihood, the so-called pop rally is going to frizzle out tomorrow. Bump and dump right away. Apple, that's questionable. It's still low, about 3%. There is a lot of room here for Apple to go crazy. But Tesla, AMD, even Ford, they're topping out here. So watch out for a pullback. Moving on to the unusual activities that took place in the options market today. And by the way, the majority of trades, you guessed it, for the expiration date of tomorrow. So there is nothing for you to follow here. But I'm just sharing these with you in case you want to grab the popcorn and watch the freak show tomorrow. Let's start with the ticker EWZ. This is for the Brazilian ETF. It was down big today, but they're betting for a rebound by buying the 36 calls for the expiration date, December 10th, with the expectations that the name could pop higher by more than 23% or so by then. They paid about 10 cents a piece to enter. this trade. All in all, spending about $500,000. What about the trade for the ticker NVDA? A lot of activities today for NVDA. For this one, they're buying puts with the expiration date, you guessed it, tomorrow. They're buying the 280 puts with expectations that NVDA could pull back by about 6% or more by then. They paid about 55 cents a piece to enter this trade. All in all, spending about $1.7 million. What about the trade for the ticker COTY, Cody? A name that I own in my portfolio, and it has not been a good performer. But perhaps our fortunes, in case you're holding the bag with me, will make a U-turn because somebody's bidding for more upside for this name, or for upcoming upside, I should say, by buying the 9.5 calls for the expiration date, November 19th. With expectations that the name could pop higher by more than 5.5% by then. They paid about 65 cents a piece to enter this trade, all in all spending about $1.8 million. What about the trade for the ticker BBY? I believe this is for Best Buy. They're buying calls here for the 140 the expiration date December 17th with the expectations that the name could pop higher by more than 9% by then. They paid about $2.25 a piece to enter this trade, all in all spending about $3.7 million. What about the trade for the ticker PENN, Penn National, was down big today, erasing a lot of gains since last year. The earnings report was terrible, of course. The name was overvalued to begin with, and then we had bad news regarding Davey Barstool. Davey Barstool got accused of sexual harassment or harassment, whatever floats your boat. I guess it makes it a little better. Your Honor, I did not harass her. I just harassed her. Not a legal advice. Don't quote me.
Castration! Double castration!
But anyhow, they're buying puts here, the $50 puts for the expiration date November 12th, with the expectations that Penn National could drop even more by a minimum of 13% by then. They paid about 79 cents a piece to enter this trade. All in all, they spent about $880,000 for the trade. What about the trade for the ticker VXX? This is a VIX proxy. It appears that the VIX is bottoming. Yes, the market is rallying in an insane fashion, but the VIX was rallying today. So somebody bought calls here on the VXX, the 25 calls for the expiration date, November 12th, with expectations that the name could pop higher by more than 25% by then. They paid about 12 cents a piece to enter this trade, all in all spending about $120,000. And at the bottom of the table, what about the ticker mRNA for Moderna? It was a good name. It was a good day for us Moderna shorts today. We scored big. But somebody's bidding for a rebound at least tomorrow. Maybe some short covering, profit taking. They bought the 300 calls. The expiration date November 5th, meaning tomorrow, with expectations that the name could pop higher by more than 5.5% by then. They paid about $1.20 a piece to enter this trade. All in all, spending about $1 million. Continuing with interesting trades. The last trade is for the ticker TSLA, the souffle Tesla. They continue to buy puts here, millions and millions and millions of dollars. And they continue to get pies and pies and pies. The most expensive pies in the world from Tesla. I guess Tesla should diversify by building electric pies. Anyways, they're buying puts, the 1,045 puts for the expiration date next Friday, November 12th, with expectation that TSLA could drop down by more than 15% or so by then. They paid about $14.50 a piece to enter this trade. All in all, spending about $11 million. They're going to be right at some point. But when? The answer, watch the options grid. It's going to frizzle out. It is a process. They're going to shift from one name to the other. All of this action will lead to a massive market accident. Moving on to the heat map analysis. What's going on here? The obvious, of course. The market is rallying on very few names here. The names that are being pushed via call options activities. So once again, the question for you is, do you think that this rally is sustainable when it's being pushed via options, market activities alone? We're seeing Amazon popping higher. This is due options, of course. We have Google, we have Tesla, NVDA, but the action was notable in chips in general, by the way. Yesterday, we talked about the SMH breaking out, and right away, traders are buying all kind of chips, but specifically NVDA popping higher. We also had good earnings from Qualcomm, by the way, and we're seeing a short squeeze in Qualcomm. AMD is benefiting with that. So is AMAT, Lam, They're all rallying higher. Another name that I like, Marvell, also popping higher. So we're seeing nice activities here in chips, excluding NVIDIA, of course. NVIDIA is moving via insane options gambling. Other notable movers today, Moderna down big, over 17% today. So what happened with Moderna? Well, the results were not good. Matter of fact, Moderna shares fall after company cuts 2021 forecast for the thing, jab sales. Gotta use the coded words, otherwise the police, the algo police will catch us. But anyhow, I already told you when I shorted the stock, I told you and I showed you the information. The jabs for Pfizer went higher after the FDA approval, and even before that. The jabs for Moderna, the numbers were down big, even after the FDA approval of boosters from Pfizer. We had problems with Scandinavian countries banning the use of Moderna jabs for those under 30, so the writing was on the wall. I don't know why investors did not catch this one. And then we have Peloton after hours crashing, and the reason is Peloton shares sank in late trading after cutting its annual revenue forecast by as much as $1 billion. Wow. I'm going to have to read all these reports because Peloton is important regarding the supply chain woes. It's an indicator about what's going on with the supply chain. I bet a lot of bikes are stuck at the port of LA Long Beach, but I'm going to have to read the report. I did not have the time to do so. Now, when we switch to the ETF heat map, just to illustrate for you the great market rally that we got today, nothing is moving. Matter of fact, the majority of the market is actually down. It is only moving higher by chips, semiconductors. We have ETFs, the likes of the SMH, the SOXL, the SOXX, all of these are semiconductor ETFs, and the market is moving higher solely based on chips, and let's be honest, based on NVIDIA. Matter of fact, the market was so bullish, even the VIX managed to rally today. Moving on to charts, starting with the 30 minutes chart of the SPY. What's going on here? Nothing is going on. The breakout continues. Everybody's playing the guessing game, by the way, the pick a top game, including myself, by the way. I ate a pie before. I'm not going to get another one. But a lot of you are doing the same, betting against the SPY in the Qs. So far, we don't have any reversal signal whatsoever. It could happen. The accident could happen. The frizzle out in the options mania could happen. But for now, the technicals say that we have yet another bull flag, which could push the SPY even higher. Now, when we switch to a daily chart for the continuous contract on the SPY, again, complete insanity. I have never seen anything like this before, and I have been trading since I was a teenager. 16 out of 18 candles are green. Both the RSI and MACD are out of whack. The market is moving via complete delusion. It started with the algos, then the mom and pops, then the money managers, pushing the inflows regardless of the result because we're all looking for bonuses. And now we have the options gambling mania pushing massive stocks, large market cap stocks, Tesla, NVIDIA, Amazon, Alphabet. Now they're pushing the market higher via pushing these names by a manufactured and organized effort creating a squeeze in the options market. The question remains, if this is the case, how much of this rally was due to the options gambling mania? Because the sustainability of this rally, of this pop higher, relies on the answer for this question. If it is 50% of the rally, then we get a problem. If it is just 20% of the rally, then okay, after the options mania frizzles out, the market retreats about 20% of the move down, and then we're good. But so far, you and I don't know how much of this pop higher was due to speculation in the options market. So far, we don't have any reversal signal whatsoever, so the game goes on. Moving on to the NASDAQ, what's going on here? Similar story, popping higher. We have yet another bull flag, but watch out here because the RSI and MACD indicators all topping for now from a 30 minutes perspective. So don't be surprised here if the bull flag doesn't work out. If the rally in NVIDIA and Tesla frizzles out tomorrow, then in all likelihood the Qs will go down. But watch out for the sleeping giant Apple. We'll talk in a second. Watch out. Moving on to the daily chart for the Qs. Again, if this rally was due to the options gambling mania, then it will be a bull trap. The volume is exploding higher on the upside. What does that mean? It means that the market maker got caught by surprise, and they're buying all of these stocks, the underlying stocks from the option. Because what happens when we stampede and we buy call options out of the money? Say NVIDIA, Google, doesn't matter. The market maker who is issuing these calls, again, it's their job. If you and I want to stampede and buy whatever derivative product, any calls or puts or whatever, they're going to have to write it for us. This is their job, this is their business. But to hedge their delta exposure, they have to buy the underlying stock. Sometimes, in certain cases, the market maker already overweight certain stock, and they can issue calls out of the money no problem. They're not going to get squeezed. The problem is when you have under allocation in certain stocks, and then traders start to buy out of the money call options. In that case, like we saw with NVDA, for example, the market maker has to scramble and buy shares of NVDA to hedge their delta in case the stock explodes higher. This buying of the underlying stock pushes the stock higher, and we're talking about big cap technology names. We're talking about NVIDIA, we're talking about Amazon, etc. This will in turn push the NASDAQ also higher. The problem is what happens when the mania is over and the market maker doesn't need to hold these shares anymore. They dump them right away. And therefore, I say be careful of a flush down or even a market accident at this point. Moving on to the IWM 30 minutes chart for the Russell 2000. What's going on here? Again, popping higher, we have a bull flag followed by another bull flag. The problem is, I don't know if you're seeing this or not, what if this a head and shoulder formation and we have a top for now? What are the implications in the so-called breakout in the Russell 2000? To answer the question, let's zoom out to a daily chart for the big Russell 2000. This is a weekly chart, of course. For now, we still have the breakout. The chart did not close below 2,360 for the week. If it does, then this is a bull trap, a false breakout, and we all fell for it. If the chart closes the week above that number, then the outlook remains intact. The Russell is about to explode higher. It doesn't make sense, I know. When tapering is here, when we are at late cycle, I know all of that. But the technicals are suggesting that we have a breakout in the Russell. By the way, we have another analyst who says small cap stock breakout. Maybe, but don't expect to make easy money, says Chart Watcher. And the gentleman says, watch out for a false breakout or gap and go. And I read the article, and the analyst says the Russell 2000 could go higher, or it could go down. Prepare for each scenario. Moving on to the Dixie, the dollar index, what's going on here, responding to tapering by popping higher. The momentum indicators, the RSI, the MACD, they're reversing the negative divergence, and they're about to pop in positive territory, at least in the MACD, indicating that perhaps we have higher highs for the US dollar. What about gold? What's going on here? Gold is popping higher, even though the dollar is also popping higher. Why? Because gold has three enemies: the dollar, the 10-year yield, and Bitcoin. Now, gold usually gets tag teamed by the three enemies, but sometimes gold picks its battles, and right now it is concentrating on yields. The 10-year yield pulled back, and therefore gold is popping higher. The problem is, what if the non-farm payroll come out hot tomorrow? Then we would see the 10-year popping higher, gold pulling back. And here it is, the chart of the 10-year yield. What's going on here? Pulling back after the decision or lack thereof from the Bank of England. The problem is we are still maintaining higher lows. If the number is too hot from the non-farm payrolls, the likelihood is the 10-year will pop higher, regardless of the manipulation efforts by Powell, playing the mental gymnastics, telling us that interest rates will not pop higher. Baloney. You're going to be forced to do it. You know it and I know it. But let's point out the obvious here. What if what we're seeing in the 10-year chart just a head and shoulder formation? If that is the case, then the 10-year will flush down. This will be a problem because the Chicago PMI, the services PMI, a lot of indicators, including, by the way, the weekly jobless claims today, the ADP report, all indicating that at least for now, the pace of economic growth is still intact. So if yields go down in the long end of the yield curve, of course, this will be an indicator that the economy is about to slow down dramatically. The bond market remains a battlefield, at least for now. And that leads us to the weekly chart for the TLT. What's going on here? Even though the 10-year yield flushed down, the TLT did not respond very positively. It is still trading below 149. Tomorrow will be a decisive day. If the non-farm payrolls come out cold, the cooks, they will do their best to serve a cold meal. And if they do, the TLT will pop higher, yields will flush down even more. Moving on to the VIX, what's going on here? 4 hours chart. The VIX was popping higher in the morning. However, our indicator, the MACD on the 4 hours chart of the VIX, did not show any green impressions on the histogram. You're not going to go long the VIX, short the SPY until the MACD on the 4 hours chart trades in positive territory, and two conditions: trades in positive territory above the neutral line of 0, but also shows green impressions on the histogram. The support remains 15, the resistance remains at 20. We know the bulls want to crush the VIX on Fridays. It's already crushed. It's already at the support. The bears, we're talking about market bears, of course. They want to pop the VIX and close it above 20 by the end of the week. Can they do that? Well, they have failed week after week after week. The bear energy is just not here. When you look at the options grid in the market, they're not buying puts. The shorting activities are pretty much gone. Nobody's shorting the market anymore. So where did the bears go? For now, the field is open for market bulls to do whatever they want. And therefore, the market rally is cartoonish. Market bulls right now are like Pablo Escobar's hippos. They're roaming free in Colombia, no predators at all. They're in heaven. So are market bulls, at least for now. What about the daily chart for Apple? What's going on here? It continues to struggle to close above 150. For now, it is at around 151, but can it hold by the end of the week? Let's zoom in and call the obvious. What if this is a bear flag, and if it plays out, then Apple will trade down. It would close below 150 for the week. This will be an ominous signal. However, the other side here, we're seeing a lot of options activities on Apple, buying an enormous amount of call options. This is the battlefield. Will the options market players push the chart higher? We're talking about the most expensive and largest name in the stock market. You cannot stampede on call options and push a 2 trillion plus stock higher based on a gamma squeeze alone. Not going to happen. You need a massive stampede, and whatever pop will be for the short term only. So we will see who's going to win here, the candlestick pattern or the options market activities. And all of these activities, by the way, buying call options with the expiration date of, you guessed it, tomorrow. Moving on to the daily chart for the souffle Tesla. What's going on here? Nothing is going on. You cannot look at this chart and break it down technically. There's nothing to look at here. It isn't a breakout. It is far above the trend. There is nothing to look at here. This is a game of expectations and psychology. For now, there is still some energy in buying Tesla call options. But why would I stampede and buy Tesla call options at the highest implied volatility and the stock pops 5, 6, 7% and only make 50 to 80% gains? Not cool. I want to make 11,000%, just like we saw today with NVDA. What is the next NVIDIA? This is the psychology right now for this options gambling mania. They're looking for the next name. What is the next name to stampede in and push that particular stock higher so call options can appreciate by over 1,000%. Moving on to tulips, what's going on here? It is starting to look a little negative here because the momentum indicators appeared as if they're correcting the negative divergence, but now they're diving back down. It is not over yet. The energy remains intact in cryptos, specifically Bitcoin, but we have a lot of distractions here. Bitcoin hasn't been doing anything for weeks now. On the other hand, we're seeing a lot of action in AMD, NVIDIA, Tesla, Ford. It is all a game of psychology when it comes to retail gambling. We know that the big whales, the sharks, are initiating the moves, but us, the retail crowd, were following the initiation. We're stampeding, and now we're looking. What is the next NVIDIA? Why is my money being held in Bitcoin? I'm already up 30% when there is the next NVIDIA about to pop higher. And I could use that money and make 30,000% gains. This is the mentality of market participants right now. Lastly, moving on to AMC. What's going on here? Still holding the support of 39, but it appears that the mania lasted for only 1 day. Now, here is the possibilities for AMC to pop higher by tomorrow. We look at the options grid. We already have the $40 calls already in the money with about 16,500 open interest, meaning the market maker will try to push AMC down below 40. They want all the holders for the 40 calls to lose their money. The trick is for AMC apes to stampede, buy the stock, push it higher, and all of a sudden the market maker will fail. They will realize that they will have to buy the stock to cover for the open interest at the 40, 42, and even the 43 calls. We could see a squeeze in AMC if the apes participate. If they're absent, then forget about it. The market maker will win, they will push the chart below 40, and goodbye. By the way, here we have another analyst who says AMC stock slips after another analyst's turns bearish, saying retail investors will eventually cash out and move on. I don't know. Let me know. The ape community, what are you going to do? Are you going to cash out and move on? Or are you going to show this analyst? You're going to stick it to the man by stampeding and losing your money again? Lastly, we're moving on to the conclusion of this video. What do we have on the earnings calendar tomorrow? Nothing, but here's what I want to say. To give these earnings the reviews that they deserve, we have to spend a little more time in doing the earnings reviews so we can tie up the financial results with the stock. And this will take about an hour video to do all of these names. Therefore, I want to produce a video tomorrow for Friday that includes all the reviews for all of these names. Of course, Win did not report earnings, by the way. This was a mistake. It's MGM. So we're going to go over MGM and perhaps Penn National too, spending an hour or so doing all of these reviews. And by the way, for you viewers who criticize me of being too bearish and alarmist, yada, yada, yada. No, you're too lazy, bitch, because I do these videos of earnings reviews and I go over all of the financial and technical information, and I share with you which stocks I'm buying, which stocks I'm selling. But some of you are too lazy to watch these videos. Now, that's not my fault. I'm producing the content. If you're going to judge the videos and the channel based on the thumbnails and the titles, that's up to you. But I'm providing you with over an hour sometimes, almost an hour every day, full of information. So once again, if you don't watch it, that's not my fault. Lastly, what do we have on the economic calendar tomorrow? We have the big day, the non-farm payrolls. We already have two leading indicators, by the way. The ADP, the private sector of the economy, which created over 570,000 jobs. And then we have the weekly jobless claims down to a pandemic low of 269,000 claims. The delusional Fed Chairman Powell says, I'm not gonna increase taper or lift interest rates higher until I get maximum employment. And he never defines what maximum employment means. He will be confronted big time if we get a hot jobs report tomorrow. Mr. Powell, what are you waiting for? You have achieved your goal in inflation. It is way above 2%. You have achieved your goal in unemployment. The unemployment rate is down, let's say, to 4%. There is a lot of labor don't want to participate. You cannot force them to participate. More printing, more accommodation for Wall Street and the stock market will not motivate people who want to stay at home and not work to go get a job. Simple as that. Of course, Powell doesn't care. He's a puppet. That's what he is. He's a puppet for the overlords and the true rulers of this country. And he is not going to taper more or raise interest rates until he gets the green light from the overlords. One thing the overlords don't like is when wages go higher. What are we having right now? Labor strikes all over the place. Wages surging out of whack, which is good for us, but it's also bad because inflation around us continue to surge at a faster pace than wages. But at some point, the overlords will say, you know what? The benefit of inflation is now tilting toward the workers, not us. The wages continue to go higher and higher and higher. And at that point, Mr. Powell, start tapering and raising interest rates right now. We want to pull the rug, cash in, crash everything so we can buy it again at a cheaper price. And with that, ladies and gentlemen, thank you for watching. Thank you for listening. This is all I got for you for now, but I will talk to you again tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.